Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with JDM. Today's outlook, we start with Asian markets. They were seemingly unaffected by the weakening finish overnight in the US as investors eyed continuing gains in oil. And of course, the US dollar ahead of the unofficial start of earnings season on Wednesday. Japanese stocks hit fresh multi-year highs on Wednesday after the Bank of Japan kept its massive monetary stimulus intact as expected. The central bank also mentioned that the world's third biggest economy is recovering moderately. Now, the dollar was steady in early Asian session at 120.325 yen after jumping 0.6% the previous day, when of course the currency market returned to full strength following the Easter holidays. The greenback was back at a level prior to Friday's much weaker than expected U.S. jobs data release, which took it down to as low as 118.71 yen, by cooling prospects of an earlier increase in rate hike by the Federal Reserve. European equities, however, edged lower in a morning trade today, despite a surge in energy stocks, with Shell launching a big for UK-listed BG Group. Now, the pan-European Eurostoxx 600 index was slightly lower at the session open, with most sectors posting slim losses. Oil and gas firms surged by over 5% in early deals, BG Group rising by 42%, and Shell lower by 1.5%. Greek Prime Minister Alexis Tsipras is in Moscow to meet Russian President Vladimir Putin on Wednesday today. The meeting comes as both leaders face increasing isolation in Europe, Tsipras for his country's economic crisis and Putin for his country's annexation of Crimea and, of course, part in the conflict in East Ukraine. Speculation has mounted that Russia could offer Greece financial aid, but officials in Europe are worried any aid offer could be used to secure a Greek veto against any new European sanctions on Russia. Taking a brief look on the commodity sector, gold hovered above the 1,200 level an ounce on Wednesday, trading not far below a 7-week high, as expectations that the Federal Reserve could delay an anticipated rate hike this year as growth looms. Now, the Fed will release the minutes of its March meeting later in the day, and analysts say this would likely affirm policymakers' cautious outlook on the U.S. economy. We expect the minutes to confirm that the Fed will remain dovish in the near future, with of course a caution outlook along the lines of the U.S. economy is not ready for a rate hike soon. Gold is already pricing in for the action later today. Oil prices fell more than 1% in today's trading as industry data showed a larger than expected weekly increase in U.S. stockpiles. And of course, as Saudi Arabia reported record output in March, the decline in prices followed a rally on Tuesday when U.S. crude approached 2012 highs, following strong job data and government forecasts for lower U.S. crude production growth and, of course, higher global demand for oil. We're going to need to see a very big uptick in demand to offset that supply. Data from the American Petroleum Institute showed U.S. crude stockpiles surged 12.2 million barrels last week against analysts' expectations for an increase of 3.4 million barrels. And of course, at the end, in the calendar, we're expecting today European retail sales at 9 a.m., MBA mortgage applications at 11, and at 18 FOMC minutes. That's all for today. Keep an eye on the calendar, important events today. Bye-bye.